I went down to Washington, D.C. last week to the White House. I interviewed Bo Hines, who's the executive director of the President's Advisor Council for Digital Assets. And I explicitly asked him this question. And the thing that he said to me that I think kind of took away was not only are they going to have the Bitcoin Strategic Reserve, which we have, they are going to buy as much Bitcoin as they possibly can.
The debate is heating up. For years, gold was the unquestioned king of financial hedges, a store of value that nations, investors, and institutions relied on in times of chaos. But now, Bitcoin is emerging as a serious contender. With the U.S. government reportedly building a strategic reserve and influential voices predicting institutional accumulation, Bitcoin isn't just challenging gold, it's threatening to eclipse it. A recent CNBC interview laid out why this shift might happen sooner than anyone expected, and why this year could be the tipping point.
Bitcoin is down about 10% to start the year. Gold's up 20%. But if you look out over 1 year, they're both up about 35%. So it's pretty interesting that there's been this divergence. But if you go back and you take a look, you can actually see that gold usually leads these rallies. And nobody really knows why that happens. My kind of guess would be that a lot of the central banks and institutional investors, they're either not approved to buy Bitcoin or they're not used to running to Bitcoin in these moments of kind of geopolitical uncertainty.
This insight reveals a fascinating pattern. When crises strike, institutions still flee to gold, but Bitcoin often follows, and when it does, it runs further. Gold is the old reflex, Bitcoin the new frontier. But the difference in timing might be Bitcoin's greatest opportunity. It's not about matching gold move for move. It's about using its volatility and momentum to outperform once the initial flight to safety subsides. And according to historical data, it often does just that, only on a delay.
What we do see, though, is when gold runs about 100 days later or so, Bitcoin not only catches up, it usually runs much harder. And so you get that kind of higher volatility.
This lag time has become a signature behavior of the asset. Gold signals fear, Bitcoin delivers the rally. For investors looking for outperformance rather than stability, the play becomes obvious. But this isn't just about price charts. It's about how Bitcoin is being accessed. And for many of the largest players, that means ETFs. These products have created a crucial on-ramp for conservative investors who want the returns without the responsibility of private custody.
There was a sovereign wealth fund that came out and said, hey, we actually got Bitcoin exposure through the ETF. And the reason why I thought that was interesting is there's a lot of conversation about Bitcoin and the geopolitical kind of debate, if you will. And one of the things is if you are buying Bitcoin and you're actually taking control of that Bitcoin in a self-custody way, you may be doing it for things other than price. You may be worried about the U.S. Treasury market or maybe sanctions or something like that. But if you're buying Bitcoin via the ETFs, you're simply just getting price exposure. You're not actually doing it from a geopolitical strategy standpoint.
That distinction matters more than most realize. Buying Bitcoin directly suggests concern about sovereign risk, currency debasement, sanctions, central bank overreach. ETF exposure, on the other hand, is cleaner and less political. It's about returns. It's about diversification. And perhaps most of all, it's about not missing the next big rally while regulations continue to evolve. But some governments are thinking more seriously, more strategically.
And so I think there's a lot of countries around the world that are saying to themselves, well, if the United States has a strategic Bitcoin reserve, they're openly talking about the fact that they're going to go buy more, we should have a Bitcoin strategy. Doesn't mean that we have to buy. We could just sit it out. But we need to have a decision here.
The U.S. publicly entertaining the idea of a Bitcoin reserve was unthinkable just a few years ago. Now it's a serious conversation at the highest levels of government. A working group has already been assembled to determine how such a reserve would be funded and executed. And the options on the table range from reallocating national gold holdings to tapping unused tariff revenue. What was once the playbook of tech billionaires is now entering federal policy discussions.
A couple of examples would be they could revalue the gold, they could sell some of that, they can then go and they could buy Bitcoin.
Does that have to be done with Congress's approval?
There's a debate around who would be responsible, who would be involved. And they have
all this has to be done with executive order? I mean,
well, they have an interagency group right now that's working together. And so at that table is everyone from energy policymakers to law enforcement to economic advisors. Kind of everyone is trying to figure this out.
This is no longer fringe thinking. It's coordinated, calculated, and increasingly mainstream. The White House, economic policymakers, and regulatory agencies are not debating whether Bitcoin is relevant. They're debating how to incorporate it into the national balance sheet. But as expected, the political optics are complicated. Buying Bitcoin might mean reducing reliance on treasuries or even liquidating traditional assets, moves that will surely draw scrutiny.
Effectively, you're buying Bitcoin, you're leveraging up the taxpayer. Like that, you're basically going to have to sell treasuries to buy Bitcoin. So you could, that's like what Michael Saylor does, just in a different format. And the question is whether the American public is game for that.
And that's where the conversation begins to split between what's smart from an investment standpoint and what's feasible from a public policy one. Can the U.S. truly sell part of its traditional financial instruments to hold a volatile digital asset? Or will the cultural and political inertia be too strong? For now, the more immediate shift is generational. The younger financial class sees Bitcoin not as an alternative, but as a necessity.
I think that the big shift that's happened, obviously, many people that watch the show probably grew up in a 60-40 portfolio world. A lot of the younger people are saying that 60-40 portfolio no longer works for me. And so things like Bitcoin are entering into that conversation. And as these young people ascend to positions of power and influence, I think they'll have a big hand in making these decisions.
This is where everything starts to converge. Institutions are dipping their toes in through ETFs. Governments are weighing strategic reserves, and a younger generation, disillusioned with fiat systems and traditional portfolio models, is championing Bitcoin as a form of sound money. Gold isn't dead. It still commands trust and has the benefit of legacy, but its grip is loosening. The conversation around Bitcoin is no longer about whether it belongs, but how fast it's getting adopted and by whom. If Bitcoin can maintain its role as a store of value while outperforming gold's returns, then it may not just rival gold, it could replace it.
Onto that gold. And what people are really starting to wrap their heads around is that Bitcoin is digital gold. And so as we head into this world, you need things that are sound money, right? That's ultimately what you're trying to do here. And gold is an analog version of sound money. It's outside of the legacy financial system.
And no one can believe that, if you don't, in this case, if you don't believe it, then it could be a huge mistake.
And listen, I think that every decision they make financially could be a mistake, right? Holding gold could be a mistake in the future.
Right.
So you have to take some degree of risk.
Holding fiat, holding bonds, holding long duration bond, all those things could be bigger mistakes than Bitcoin.
So what do you think? Are we witnessing the beginning of Bitcoin's reign as the premier store of value? Or is this just another chapter in a long battle between old money and new? Let us know your thoughts in the comments below.